Hello everybody, good morning and welcome to the European Session Brief. We're on Wednesday the 3rd of May 2023. Interesting day in markets yesterday, a bit of volatility among global equities. Got a few headlines to discuss this morning, one of them being this continued banking crisis. JP Morgan's chief Jamie Dimon had said the current banking crisis was nearing its end after the company's purchase of First Republic recently, but yesterday, US regional lenders PacWest Bancorp and Western Alliance Bancorp led a deep sell-off in the sector as renewed fears over the health of the financial system hit Wall Street after the second largest US bank failure ever. Trading in both firms triggered multiple volatility halts as PacWest fell 28% to close at a record low, while Western Alliance tumbled 15%. The pair has shed more than $5 billion in market values so far this year. That caused a bit of uncertainty in equity markets as well. Just added to the JOLTS job openings miss, which of course suggests potential recession on its way for the US, or at least it's an indicator that there could be. It's just adding to that overall basket of indicators that of course get monitored. But it just added to the sentiment yesterday. Plus, technically, you saw the S&P hit that pretty big resistance level of 4160, and you saw quite a bit of downside from there. And that banking crisis was part of the reason for that. Fed Day. We're expected. They are expected, not we, I'm not from the Fed, they are expected to deliver a 25 basis points interest rate increase and signal a pause in its aggressive hiking campaign amid persistent financial market turmoil and renewed pressure from lawmakers to back off. Fed watchers expect the US Central Bank will deliver its final rate hike for a while today, while tighter lending conditions and signs of a slowing economy suggesting inflation will cool more meaningfully in the months ahead. The move would bring the federal funds rate to a range of 5% to 5.25%, which is the highest since 2007. Lingering concerns over the US banking system have increased some bets that the Fed will pause this week, though policymakers have so far divorced interest rate policy from their tools to shore up the banking sector. So, like I mentioned, the threat of recession and it's making debt securities a safer bet, while the stock market is yet to price in those risks. That's the view anyway of some fund managers and strategists from JP Morgan to UBS and Morgan Stanley, who now prefer fixed income instruments to equities. The argument is that bonds, particularly higher rated ones, will be able to better weather any economic slowdown, whereas stocks would suffer more if the Federal Reserve fails to navigate a soft landing. They have numbers to support their convictions. Buying bonds now offers investors extra yield and they can benefit from capital gains if interest rates drop. Let's have a look at markets as we head into the European Open in half an hour's time. European equities are on course to advance as we await the Fed's decision. Of course, that's not until later on this evening here in Europe. Very early morning, I think 4 a.m. in Eastern Australia. What else have we got from Europe then to get the ball rolling for today? Not much. Italy's unemployment. We've got Airbus, BNP Paribas, and Inala among a few companies on the earnings docket today. Copper. Have a look into the copper. There's some flashes of warning of a huge crisis for world supply. It's something worth having a little bit of a read into if you've got the chance to do so. There's a few Bloomberg articles which are discussing it, and it's looking pretty interesting for copper. I mean, the price has been drifting lower since January, but China's economy has been pretty resilient. Even Europe has managed to post a modest expansion in the first quarter, which indicates global growth is not at risk of an imminent contraction. This has prompted some commodity analysts to call for copper to see a 25% price rise over the next 12 months. So of course that sort of dynamic means that traders that are building some short exposure needing a dramatic collapse in demand to trigger a momentum driven sell-off. A tipping point for the industrial metal may arrive with Chinese data in the next week, especially the import numbers. Traders bearish on copper will be looking for Chinese resources demands to weaken. If that doesn't materialize, however, a short squeeze may not be too far away. So check out your copper charts if you do trade any copper from time to time. Let's have a look at European markets then. We've got the euro, which has traded quite nicely off some technical levels of ours in the past 24 hours, and today as well. In fact, we've just seen a rejection early on off this 1.1030 handle. We've had this on here for a while, and we bounced off our downside of 1.0940 yesterday, so pretty nice looking technicals to trade within that range, and of course probably going to be moved and maybe be a little bit quiet until the Fed, but you've just seen that reversal off that level. The DAX was pretty volatile yesterday. We were set to open at new yearly highs, didn't get the follow through. In fact, we tried, but then that got rejected. Just fell in line basically with the global risk off move that we saw in equities yesterday, but we did move down and found some pretty key support, and you can quite clearly see how big that support level is at 15,735. You've had quite a lot of recent daily bars test that level. You can see the size of the wicks on each one, relatively lengthy wicks, but you've also seen some resistance at this level in the past, so you can see how key that is for us moving forward on the DAX. The cable did move down slightly yesterday, but ended pretty flat, and today there's not much going on yet. The FTSE produced quite a sizable outside bar. You can see the high and the low, basically higher and lower than the previous low and the high. We did get that pin bar reversal on Friday, but just not able to follow through on that whatsoever. We did end up trading low, albeit not a lower close. We closed just inside the previous bar's low. Today on the FTSE, you can see just moving up slightly. We're a bit of a no man's land at the moment. I don't have a major support level until 77.10, so maybe we just grind a little bit lower until we get to at least that level from here. That's it from my end. European session brief, European markets. I'll see you all later on. Till next time, all the best with your trading, and bye for now.